Hello guys, you're welcome to AOK Institute. We are going to look at how to build a payroll using Excel. Okay, so we'll be looking at this case study and how to build a simple payroll in Excel. So let's start with the case study. Now we'll go through the entire case study to understand every aspect of this information and how it will be useful in building up this case study. Excel payroll. You must understand that this Excel payroll template that we're going to design is based on the Ghanaian tax law. Okay, so if you are the payroll manager or an account officer, you should know this. Okay, so have that in mind. So the basic concept may be the same in other countries, but our focus here is the Ghanaian tax law. Okay, so if we look at this information, you realize that they released to AOK for the 2019 year, and the company has about 101 employees, and it consists of this 90 local and then 100 and then 11 expats. Each local employee is given the following taxable allowance. So the emphasis is on taxable, okay, and also on a monthly basis. So we'll pick each of these allowances. We look at their respective Okay, let's move on. We look at their respective percentages. You can see that the cost of living allowance, we will be calculating 20% of the employee's basic salary. The uniform allowance is just 2%, and then the utility is 10%. So what it means is this: these allowances are taxable. They need to be added to the employee's benefit or income before subjecting it to tax. Okay, so let's take note of that. Now, if we were given the annual allowances, we would have divided each of them by 12 to get the monthly allowance. But in this case, we've been given on a monthly basis, so we pick it as it is. Okay, the company gives a reimbursement transport allowance. Okay, so another allowance here, we will see whether it's taxable or not, to all local employees. So now you can see this particular allowance here is given to all local employees, but it is in the form of reimbursement. Okay, so transport allowance is given to them. This will not be subjected to tax. So in computing for our taxable income or our chargeable income, these will not be added at the beginning. When we go to our Excel payroll, you will understand it better. It is not taxable, but it is being paid to the employee. So we will see how to add it to be able to determine the take-home pay. Okay, and for us to get this, it is 15% of the basic salary for each month. Okay, the only difference between this and the allowances up here is the fact that one is taxable and one is not taxable. So please take note of this. When we get to our Excel, we will know why we are treating the other different. Okay, now we move on. All drivers are paid an overtime of a time Okay, a time and half of every extra hour they work in excess of the standard hours. Okay, so here they indicated 48 hours. We know the standard hours is supposed to be about 40 hours for each week. Okay, so depending on the number of weeks that we may have in a month, we will be able to determine our standard hours. Each day you work for 8 hours, so depending on the number of days in a week that you worked, you will get your standard hours. If you are working for 7 days, then we need to multiply that by 8 hours, then we'll get your standard hours. If you are working for 5 days, then we multiply by the 8 to get the 40 hours. Okay, so later we'll come to this. If there is an issue with this, we'll just rectify and then move on. Okay, so the idea is the fact that if you work extra hour in excess of the standard hours that you're supposed to work, there will be what we call overtime. So it means we will be talking about overtime in detail to know about how to treat it, the taxation, and so on. Okay, now each local employee is entitled to a total leave day of 22 days in the year. Every employee is entitled to this leave. Now, what happens if you are not able to use all your leaves? What does the company do in this case? At the end of each year, if this leave is unutilized, okay, by the employee, she or he will be entitled to 10-day leave encashment. So here what it means is you have 20-day leave off. You did not exhaust all these 22-day leaves. If you have any of the days left, the first 10 of the days left, you'll be entitled to an equivalent amount in cash. So for example, if your 22 days, you had 12 of it left, you will only be entitled to encashment of what? 10 days. So it will be 10 over the 22 days times your basic salary to determine your 10 days leave encashment. Now, the 2 days, okay, I use 12 as an example. So the 2 days, which is the difference after the 10 days has been paid, the 2 days, which is the difference, cannot be carried over to the following year. It will have to be written off. What other companies do is that whatever leave you were not able to use, they will pass it on to the following year. Some will also restrict it to a number of days, and then you carry it to the following year. But for this case study or this company, they are saying we'll give you an amount that is equivalent to this 10 days, okay, based on your salary. All right. At the end of each year, all local employees are given 1 month of their salary as what? Bonus. Bonuses are paid at the end of the year. So we'll be looking at how to treat our bonus. But the emphasis is 1 month salary. It should be given to you as bonus. Okay. And then there is also what we call medical allowance, which is also equivalent to 1 month's salary. Okay. So we will talk more about the bonus and overtime later in the discussion. Now, for some companies, what they do with bonus is that if you have been with a company for at least 6 months, you will be entitled to this bonus. And for some companies, 3 months, you'll be entitled to this bonus. For some companies, you should have been with them throughout the year to enjoy this bonus. So for this company, we are just assuming if you are there for 6 months, you should enjoy this bonus. So depending on the situation in your company, you can apply. But the emphasis is how are we going to treat the bonus? How are we going to look at the tax involved? That's our main focus. Okay, for medical allowance, what most companies do is that you are entitled to a certain sum of money as your medical allowance. In this case, 1 month's salary. Now, in the course of your work throughout the year, if you fall sick, you go to hospital, you can present your bill to the company and tell them you went to the hospital and this is your bill. They will be able to pay if that bill is within the 1 month salary. So if your salary is, let's say, 1,000 Ghana cedis, you present a bill of 1,200 Ghana cedis, you only be given 1,000 Ghana cedis because the policy says 1 month of your salary. Okay, so later all these will come in at the end of the year. Okay, so when we are looking at December payroll, we'll see that all this information will be relevant: the leave, the bonus, and the medical. Okay, employees who are unable to claim their medical allowance in the course of the year will be entitled to the full amount. Emphasis is full amount at the end of the year. Now, you are entitled to 1 month's salary. So, example, the salary for the employee is 1,000, and there were no incidents of presenting a bill, and so all these 1,000 is available. What it means is at the end of the year, you will then get all as part of your entitlement from the company. For this discussion, we will assume that no employee presented a bill for any health allowance or medical allowance. Okay, let's take note that all these allowances they are talking about has to do with the local employees. So in this company, there's nothing like medical allowance for the expat or bonus and so on. So let's take note, all this information here pertain to the local employees. Okay, all expats. So we are now at a point where they are giving us information about the expats. Expats are basically individuals who do not come from our country but are working in our country. So their treatment is a bit different. They may pay the same taxes and so on, but depending on the company's policy, certain things will change. Okay, so we are looking at some allowances that the expats are entitled to. All expat employees are given the following monthly. So let's take note again. This is monthly. All these allowances are taxable. Again, the fact that these two allowances given them are taxable: inconvenience of 30% of their basic, family allowance of 20% of their basic. Okay, so when we start with the Excel template, we will come back to all this information and input them. Okay, the company retains 45% of all expat net salary payable. Now, after we've deducted the tax and everything that we need to deduct from their salary, what is left to be paid, we are going to withhold 45% of it and pay to their foreign account at the end of every quarter. Okay, so this is something special with regard to the expats. We don't have this in the policy of the local where we withhold any amount of their money. But for the expats, whatever money that is due them after tax and all other deduction, we are going to withhold 45% of that amount and pay in a later date, which is every quarter. Okay, so all salaries are paid based on attendance. So when it comes to payroll, attendance is very, very key. It is the policy of the company to deduct the number of days absent against the basic salary of all employees. So let's take note. If you don't come to work for a particular day, it will go against your salary. If there are 21 days for you to work, but you came for work 20 days, then your basic salary is going to be affected. You will only have 20 over 21 days times your basic salary to get the actual basic salary for the purpose of payroll. Okay, so later we'll see the attendance and we'll mark all those attendance. The company deduct 5. Let's continue. The company deduct 5.5% Social Security or SSNIT. Okay, this is an insurance, mandatory insurance by the government. Now, an employee of any company is supposed to pay 5.5 of his salary, which will be withheld by the employer. Okay, now the employer also has a responsibility of actually paying 13% of that employee's basic salary. So in effect, the SSNIT contribution, okay, the insurance contribution for the employee is going to be 18.5%. Now, this 18.5%, the employer has an obligation of actually paying 13.5 of it to the SSNIT authority, which we consider as tier 1. Okay, and then the remaining 5% will be paid to tier 2, usually Pentrust Fund. Okay, other companies have other insurance policy, but these two are the mandatory ones, the tier 1 and the tier 2. Okay, this payment is made latest by 14th day of the following month. Okay, so if you are in January and you've withheld this SSNIT contribution for the employee, you will need to pay back to the authority 14 days after that particular month. Otherwise, you will start paying penalty on the amount involved. Okay, the company also withhold PAYE. PAYE is pay as you earn. That's the income tax. You know, the government cannot wait for the year to end and then tell the citizens to file their return and come and pay their tax. That will mean the government will have to sit and wait for the year to end before it can actually make money and start with its activities. So what the government will do is they allow the employer to withhold a portion of your income as tax. So at the end of the year, when you file your return and you compute your actual tax, all this PAYE that you have been deducted will actually be credited to your account and subjected to your tax liability. Okay, so the employer again has an obligation to withhold an amount called PAYE, and this PAYE or income tax has an individual tax rate for determining. So later we'll see how to go about. We'll put an automatic formula in Excel that will be able to generate the tax for us. Okay, and with this also 15 days after each month you need to file your returns with GRA, Ghana Revenue Authority, and then pay. Now, employees relief. Now we are talking about relief. Okay, so reliefs are incentives that are given to the employee to reduce the tax burden. Not everybody will be entitled to a relief. You will only be entitled to a relief when you actually apply for the relief and the tax authority gives you a relief certificate. That is the only time or the only way the payroll manager can inculcate a relief in your payroll. Without a relief certificate, nobody can enjoy the relief. Okay, so moving further, we may see some employees who have received their relief certificate and are entitled to certain reliefs. We'll see how these reliefs will be applied in determining their taxes. Now, you have to note that before you can actually determine your PAYE or your income tax, whatever chargeable income, okay, or taxable income, taxable or chargeable income basically represent the income that has to be subjected to tax. You have to deduct your SSNIT from it. Whatever is left, then you can actually subject that figure to the tax rate. Okay, so let's take note. The SSNIT, the relief has to be deducted from whatever proceeds you are getting from the company before we will subject it to what? The individual tax rate to determine our income tax. Okay, so we move on. Employees are also entitled to 2 months salary advance. Now, salary advance, you are taking salary for months that you've actually not worked for. And the policy of this company is saying you can only apply for salary advance for just 2 months. Now, when you do this, what happens? If you look at this, they say it's payable within the next 6 months. So, if you go for a salary advance of, let's say, 10,000 or 12,000, for example, every month we need to start deducting your salary till the 6th month, where all the 12,000 that we gave you would have been deducted. So 12,000 you divide by your 6, and then you get your 200 or 2,000, sorry. Now with this 2,000, every time you are paid, 2,000 of your salary will be deducted against this salary advance that you took. Okay, so later we'll see those who are entitled to salary advance and those who actually applied and the deduction that we need to do. Okay, alright, so we move on. Here they did not restrict the kind of employee that is entitled to these advance. It said employee, so it means expats, local, they are all entitled to this policy. Now the company's payroll period start from this to this. Now, in order not to have issues of pay or salary late, most payroll period does not start from, let's say, the beginning of a particular month to the end. It starts from previous month and then it ends in a particular month. With this, you would have taken proper attendance and filed for payroll purposes. Okay, so this case study is saying the payroll period is from 25th of each month to 24th. Now, if you take November, your November period of paying salary will be from 25th October to 24th November. If you take that of December, it will be 25th of November to 24th of December. That's basically how the period is going to look like. Now with this, you will be able to get proper attendance record of all employees to be able to key into the system to determine your accurate payroll figures. Okay, so let's take note of this so that when we are taking attendance, we will know what we are doing. Payment of salary is made through BOA Bank, that's Bank of Africa, for all employees. Now, depending on the policy your company has, it may restrict every worker to a particular bank. That's, for example, BOA. So here, so long as you are an employee of this company, you will have to have an account with BOA, and then all the salary will be paid through that account. So later we will see information regarding the bank number and so on and so forth. Now let's go. If you recall, we spoke about overtime. So now we need to know the actual hours that has been worked by some of these drivers. We compare it against the standard hours that should have been worked, and then we will be able to determine whether there was an overtime or not. Okay, so these are the information. Later we'll come to them and inculcate them in our overtime calculation. Now at the beginning of November, okay, at the beginning of the November period, the following employees took salary advance. Now if you recall, we spoke about salary advance, that the highest you can take is 2 months of your salary, and then you have 6 months to settle or to repay that amount. So now let's look at those who actually took this salary advance. You can see we have Bernate, who took 2,400. With this 2,400, Ben will be required to make monthly payments. Okay, so the payroll manager will have to divide this 2,400 by 6 months and then know how much to deduct at the end of every month, starting from November ending, okay, which is 24th November. So we move on. This represents the information on the employees. We have their names, we have their basic salary, we have their department SSNIT number, the tax identification number, then we have their bank details. Okay, and for the purpose of time, we have already built the payroll system with this information. Okay, all right, so we move on to the next section of the payroll information to see what they have for us and how are we going to apply it when we go to Excel. So all this represent the information on the employees. Okay, so now you can see also that the company does not pay the SSNIT of all employees who were above 60. Now the SSNIT principle is saying that if you're above 60, then by default you are not supposed to contribute towards the SSNIT. You are not under obligation. The employer is not supposed to deduct 5.5 and then 13% on your behalf, because by 60 you should be going on retirement. Okay, however, if you want to do it voluntarily, you can actually do that. Also, if you are 45, from 45 to 60, and you are employed and now your SSNIT has to be paid, the tier 1, which is the 13.5, you may not qualify for that. So what they can do is they will add your 13.5 and 5% and actually pay through tier 2. That's what some companies do. Okay, all right, but for those who are 60 years, it's optional. You are not under any obligation to determine their SSNIT. Okay, so now what it means is these employees, the following employees were above 60 years: Rebecca, Bediakon, Ben, and Benjamin. So when we are actually computing for our income tax, we need to consider that for these people, they do not contribute towards social security. okay, or SSNIT contribution. Okay, so we have to take note of this, and we will not take into account their SSNIT contribution because of their age. All employees were present. Now we are looking at attendance. All employees were present throughout the payroll period. Payroll period here means starting from 25th of October to 25th of October to 24th of November. Within this period, what they are telling us is that all employees were present. They were all present except the following. So let's see those who were not present throughout. If we look at Abigail was absent for 2 days. McCarthy was absent for 1. Apia was absent for 0 for November period. So when you are marking attendance, you need to remember that these people were not present throughout that period. So if the total attendance mark is 20, you can't score all of these people 20 because they were absent for some number of days. Okay, for this period and also for this period. So let's take note of that. All these absent were without pay in the respective payroll periods. All that they want you to understand is these absent do not represent leave. Now, if you go on leave, there's a lot of process you go through for your leave to be approved before you can stay home and say you're on leave. But if you just stay home and then you tell them they should adjust it off your leave, that will not be accepted because you didn't go through the procedure for applying for leave. Now, the emphasis here is that these absent that we see here are not leave. So therefore, they will affect the respective individual's basic salary. Okay, so when we get to the Excel, you will understand it better. Now let's talk about resignation. If you look at it, effective 1st December, one of them resigned. One of the experts resigned. That's Roxanne. He resigned. Okay. And his full and final pay was paid during the December period. Now, we know for December, the period starts from 25th November to 24th of December. However, because this person is resigning on the 1st, they are saying that the pay has to be paid at the end of the December period. Now, this person from 1st will no longer be working with you. So we call something full and final. That is, you check your records. Is there anything that the person owes in your book? What are the benefits that he's entitled or she is entitled to? And then you pay everything and you clear his name off your payroll moving forward. Okay. Now, when Mr. Roxin resigned, he had a replacement on the 5th. Mr. Robert T. Kiyosaki was replaced. Okay, so he replaced Mr. Roxin. And look at the time of replacement, 5th. It means that for so long as the payroll period 2019 December is concerned, Mr. Robert will only be entitled to a salary starting from 5th to 24th. Okay, all right. With regard to Mr. Roxin, he will be entitled to salary starting from 25th of November to 30th because 1st December he was no longer with the company. Okay, so now if you look down here, you can see we have some detailed information of the new person who is an expert. So the card number here, because this person is going to replace that person, we will just change this 1 to 2 to differentiate that this person is actually replacing this. Now they've given us the salary, the department that he belongs to, the SSNIT number, the thing, and the bank account, everything. Let's take note that these are experts. Okay, these are all experts. And so we'll see how to adjust our record, and all this happened in December. So if you are doing your 2019 November payroll, these things are for December, so it will not affect your November payroll. Okay. However, Ashrud Farida, a local staff, so you can see for this one, she is a local employee, was also resigned effective 9th November. So this resignation was done in November. Okay, so what it means is that when you are preparing your November payroll, you need to look at the time Farida worked and then the time she left. Now, if effective 10th November she resigns, it means 10th November she's not actually stepping foot in the company. So it means she worked from 25th of October to 9th November. So let's take note. If you are marking the attendance, you have to take note and know that you cannot score him, you cannot score Farida 20/20 attendance, knowing that she actually resigned on the 10th of November. And now, if Farida had stayed with the company to the end of the year, she would have been entitled to a number of benefits like medical, like bonus, and so on. Farida obviously has been in the company more than 6 months, so she will be entitled to the bonus, she will be entitled to medical, and then some other allowances. Because Farida is resigning on the Okay, let's move on. Because Farida is resigning on the 10th, she will not be entitled to salaries from 10th up to 24th, but she'll be entitled to other benefits that has accrued. Okay, so like the medical, how long has she been with the company? We'll look at the number of months she has been with the company, and then we will calculate her medical allowance. There is no indication that she presented a bill for claim, so we will assume she is entitled to the full amount. But because she did not stay till the end of the year, we will need to do an apportionment, or what we call pro rata, and then get the exact amount. Okay, so we'll be doing the same with our bonus when we start with the December payroll. Okay, so let's move on. Okay, so we move on. Now let's go to leave information. Now all employees had their 10-day leave available. Okay, now if you recall, we are entitled to 22-day leave. If we are not able to use all this 22-day leave, 10 days of that leave will be paid in cash based on your salary. Okay, now they are telling us all employees had their 10-day leave, okay, encashment available except the following. So every other employee, we are going to mark them with 10 days. Okay, but for these individuals, they have gone beyond or below the 10 days. So for example, Helen has only 6 days left. So if you want to pay her leave encashment, it's just going to be the 6, okay, over the 22 days times the salary that she's entitled to. You do the same for each of these employees. Okay, now let's talk about relief. If you recall, we said that unless you have been given a relief certificate by the tax authority, you cannot just assume that because you are married, because of your kids, you are entitled to certain reliefs. So if you look at this information, the following employees have been given, okay, certificate for monthly relief which are deductible, which are deducted against their taxable income, and this means that the tax authority gave them this. Now what it means is that they will assess set or say Ajima and see, okay, are you married, do you have kids, are you taking care of your parents, and so on and so forth. They will assess all this and know how much relief the person is entitled to for the whole year. After determining that, they will now strike an average, dividing it by 12 to come up with these monthly reliefs. So long as Seth, Sabutu, Randy, Taye, Abraham, and Jojo are concerned, they will be entitled to this relief throughout the year. Okay, so anytime you are paying them, you need to make sure you are lessening these reliefs before determining your chargeable income. Okay, so what do they want us to do? We are using the current tax law in Ghana. We are supposed to determine the take-home pay for each employee for this period, the November period, and then for the December period. And also they want us to find out how much income tax are you supposed to pay to the tax authority, how much SSNIT contribution do we need to pay to the tax or the SSNIT authority. So guys, thank you for making time with us, and in the next session we will start with building the Excel template for the payroll. Thank you once again and have a blessed day.